Welcome back to Face the Nation. We now go to the head of America's second largest bank, Bank of America CEO Brian Moynihan. Good to have you with us again.
It's good to be here, Margaret. Good to see you again.
May 1st is Friday. That means a lot of bills are coming due for Americans, including mortgage payments. Last time you were with us, you said customers can call and defer those payments. How long is that going to be sustainable for?
Well, Margaret, I think let's back up. It was 5 weeks or so when we were together, and you have to think about the themes that we were talking about then. Number one, there was only 3,000 cases in the United States, so think about the difference in numbers of cases. These social distancing and shutdowns weren't in place yet, but we knew they were coming. Importantly, we talked then about the need to win the healthcare battle, win the war against the virus, and it took all people to do it. And what you've seen is our industry actually helped the way it was supposed to. And so whether it's through the regular way lending we all did in the first quarter, which is $500 billion, including for us $70 billion and $2 billion of small businesses, whether it's the work we did through the customer assistance program that you're referring to, the whole industry has adopted similar things. We have 1.25 million customers, 1.25 million customers are asked for a deferral of payments, and that will continue to go on for the near future and into the fall. And then on top of that, we also have engaged in the government programs that you've been speaking about with the various of your guests, whether it's the PPP, which $300 billion went out. The program's only 3 weeks old, and another $300 billion scheduled to go out, and we're ready to go on Monday. Or whether it's the checks that have been issued to people, which we're cashing for no fees at all our branches, even if the person's not a customer. And we're also helping those our customers get the money in their account, and we're not charging them any fees or anything, letting all the $1,200 go out to them. Or in the work we do in society writ large, which is to help our teammates be safe, and in our communities for $100 million of charitable giving and our $350 million of community development financial institutions.
Well, I want to ask you specifically about the small business program you just mentioned. That money was really quickly depleted. There's a new round that Congress put together with the White House. It goes into effect as soon as tomorrow. When will Bank of America get that money out the door? And will small mom and pop shops have a better chance at getting some of that money than they did last time when some larger firms kind of jumped to the front of the line?
Well, that money in our case, the first piece is pretty much all out the door, and it went largely to small businesses. If you think about the statistics of who we're going to put in the process next, 80% of business have less than 10 employees total. 95% have less than 100 employees. These are small businesses. We have several 100,000 to go in, and as long as the program continues to be funded, all those people will get funded. The difference between this program and unemployment is if you qualify for this program, it's like getting your unemployment authorization and then have to win a foot race to the office. We need to take away the first come, first serve aspects of this and make sure it's fully funded, because at the end of the day, it's going to where people want it. Small businesses, 25% in our case of businesses in low and moderate income neighborhoods, businesses with small numbers of employees, and we just have to finish the funding and finish the work. And we have thousands of teammates that have been working for the last 3 weeks to help with our hundreds of thousands of applications.
Is that money already tapped out?
Well, the first batch is, and then some of it will be recycled.
In 2 weeks, the first batch is because of the demand.
Right.
Is the money that's been allocated this time, do you already have more applications than expected?
Well, we don't. I mean, our portion is roughly around $50 billion applications, and we'll push those through. Not all those get funded because some of them withdraw and things like that. But I think there's a great debate about how much this will ultimately take. But this is another healthy piece that we'll put to work. And I think it's clear that between Congress and the administration and American people, we need to get all these funded and not make this a foot race. Just get the work done and get everybody through. And the work has to be done in a way that supports American taxpayers who ultimately pay for this, and also gets the small business the money and has them pay their employees, which is the goal of the program.
So when we spoke 5 weeks ago, as we mentioned, it was a different environment. Since that time, your analysts at Bank of America have changed some of their own projections. Now the prediction is 16 to 20 million jobs could be cut in this country. The recession is going to be deeper and much more prolonged than initially expected. So those job cuts, if we're at around 16% unemployment right now, which is what the White House says we're likely at, do you believe we are now at the peak of this?
Well, I think there's two things to think about. First of all, the base assumptions for that 5 weeks ago changed pretty dramatically. There was sort of a low growth U.S. Now it's a negative 6% in our case, our experts' estimates, and plus 6% in 21. But the key is to understand the quarterly flow of that. So it's a deep recessionary environment in the second quarter, a less deep in the third quarter, and then growth in the fourth quarter. So it's minus 30, minus 9, plus 30 on an annualized basis, and then grows next year double digits and works its way down to single digits. So in effect, that's one thing to think about is this is a deep recession and back out. And there's great debate about how that works, but our estimates, our experts think it's late next year when the economy gets back to the same size it was prior to this. What we see in our consumer spending is kind of interesting, and it reflects this question of unemployment and cash flow in a household, because so far the spending by our consumers, if you took from January to this week, it's actually flat to last year. But obviously, that's a tale of two pieces of time. First, it was plus 10, and then it went down about 25%, and it's leveled off there. So the month of April is down about 25%, but it's leveled off, and it's starting now to grow in certain areas, especially as you see it kind of hit bottom. So one of your earlier guesses in the entertainment business, that's still very far down, but other businesses are starting to come on after the first round of provision buying, which was a flood of activity. You're now seeing that level out. That actually provides some hope that as the economy opens up in pieces and safely, you'll see that consumer spending continue to grow, which will help fuel the U.S. economy. And so that's the second piece to keep aware of is first the economic projections, but secondly, the cash flow and the stimulus, the PPP, the unemployment, the $1,200 EIP payments, all those things are going in the economy, and we're starting to see the effect of those.
All right. Brian Moynihan, thank you very much.